Let me bring to the show my next guest this morning, Dan Gramza, President Gramza Capital Management. Good morning, Dan, and thank you so much for joining us.
It's great to be with you. Good afternoon.
Great to have you back on the show. That good morning, Dan. At your side, I guess it's still morning. We did see
it is in Chicago.
Yes, it is. We did see some interesting inflation data. What are your expectations from today's trading session? And of course, I'm keep asking my guests whether the Fed kind of underestimated inflationary pressures to the upside, in your opinion.
Oh, I don't know if they've underestimated it. What we do know is that they are willing to tolerate some. What we've seen from them is that they're saying, well, we could get some inflation. It could happen towards the end of this year, and they're willing to tolerate that going above 2%. So I personally don't think this is too much of a drama. Is it increasing? It is. Is it expected? Not totally unexpected. And what does it mean? Does it mean people are not going to stop buying things? The key factor here, I think, also is that we have this pent-up demand. Because of the virus. The pandemic really has throttled things down. And so I think that demand is still there. And so could that fuel inflation, especially as we get beyond the pandemic? I think it could, but I don't think it's necessarily unhealthy. And I really don't expect Fed action to happen anytime soon to change that.
I just wanted to have a very quick check on the futures so far. At this point, the Dow is up about 0.14%, S&P 500 retreating from its record highs, and the Nasdaq 100 off about 0.6%. Dan, we do see that we're going to have kind of economic explosion. How are you positioned on the markets when it comes to stocks? And then, of course, we're going to move to commodities and currencies.
Well, from my point of view, I'm not changing anything. And I'm primarily invested in the market because I do expect some volatility. What's interesting today, if we look at the indices, it's the way they're behaving. We have a couple factors at play here. One, we've seen some numbers that indicate the possible increase in pricing in terms of inflation. We also see people nervous because the market is so extended, that valuations are so high. And we've seen a lot of capital flowing into the market. And when everybody who wants to buy something has bought it, more is not necessarily the best thing. So we have that psychological factor, I think, out there. It's also interesting to me is that on this Friday, we are seeing the market so far coming off a bit. And what's interesting about that is, what does that mean to us? Have we gotten so high that the market is now attracting new sellers to come into the market? Or have we gotten so high that buyers are now selling to take profit? Two different dynamics. And right now we don't really know which one is there. But what we want to monitor are the next few days. If it's sellers, new sellers coming into the market, that means Monday would be a down day, and Tuesday we'd start seeing some selling coming into the market to continue. Or if it's buyers selling to take profits, that means on Monday we can have a small range and actually close positive, an indication that that selling is finished. So I think we have a few references to think about over the next few days in terms of market behavior.
This is extremely interesting. What kind of a second quarter do you expect? We saw an extremely positive for the markets first quarter, positive for commodities, specifically the crude oil. We can't say the same for the precious metals, in particular gold and silver. But what kind of second quarter do you expect?
Well, I think gold and silver, let's start there. Those, I really think the issue is its inability to really follow through. And it's been struggling like this for a long time. For gold and silver, I'm not bearish on them, and I'm not really bullish on those. I think a neutral stance right now, a sideways move, makes sense in those markets. And Alex, I feel the same way about crude oil. I mean, if we think about where we are in terms of our economy, in terms of our recovery, globally, I'm talking about right now, we still have a ways to go yet. And so I think that demand and the supply issue for crude oil is still at play. So a sideways move here at these levels, I think, is reasonable for crude oil to establish value around $60 a barrel. I think makes sense. It satisfies, if I could just say it, a lot of not only producing companies, but companies that are all downline that also are involved in the refining industry, as well as some of the OPEC countries, and in the United States, shale producers. They can make a profit at $60 a barrel. So to see a $5 range up or down from that, I think would be a reasonable expectation going forward into the next quarter.
This is very interesting. So you do not expect a major quarter for the crude oil as the first one of the year because there isn't any space for growth anymore?
Oh, I think
when
there's space.
When it comes to price?
Well, I think there is some room for it. I just don't think we have the right economic balance or imbalance to cause that movement. Again, if we look at the reality of where is demand for crude oil, and it's down about 8% in the United States. China is still heating up. We're seeing their economy continuing to move, and they are buying some U.S. crude oil. So is there demand out there? Yes. Is there enough demand to soak up that supply? And that's where I have my doubts. So I think it's fairly priced right now.
It is fairly priced between $59 and $60 per barrel. Let's have a very quick check on the dollar index, which is inching higher this morning at 0.3% higher at the 92 mark. The euro dollar at 1.18. We shall say that we did see a very, very strong dollar in the past few weeks. What's driving the price action, first of all? And secondly, what's your target until the end of the quarter?
My target for what? The dollar index?
The dollar, yeah.
For the dollar? Okay, let's start there. The dollar, I kind of question its ability to be sustainable. We are seeing buyers coming in because of what you just mentioned. The euro is weaker, the Swissy is weaker, Japanese yen is weaker, Aussie dollar is weaker. The British pound is not as weak, but it's also backed off a bit. And those are the currencies that make up the dollar index. So for it to be a little stronger today, not too surprising. What's also interesting here is, what does it say to us going into the weekend? Has the dollar index gotten cheap enough that now buyers are coming in? Or it has been in a downtrend? So is it getting low enough that now people who sold it want to buy it back to take profits? I believe the next few days of trading will give us insight into who that is. So right now, do we see buyers coming in? Is there a reason to sell the dollar index? I don't think there is. There's no sign of sellers coming into that market right now. The next few days may give us some clues. If we look at the euro, that market, 118.50 wouldn't be surprising to see that in the next couple of days, if indeed sellers are coming into this market. If, on the other hand, we get down to, let's say, 1870, and we see a little bounce, we see some shadows on the bottom of Japanese candle charts, those would be clues that buyers are trying to come back in. So I'm not super bearish on the currencies, but there's no reason to buy them today either. So I'd want to let the smoke kind of clear on the selling that we see coming into the currencies before I would be aggressive either way.
It's very interesting what we've heard in the past 2 days from different analysts in regards to the Bitcoin, it was kind of conspiracy against Chinese conspiracy against the US dollar, which sounds incredible, because at this point nothing is able to kind of substitute the greenback, at least in my opinion, but I might be wrong, that's for sure. So do you consider this theory, or it sounds just crazy?
Well, I don't know if it's crazy, but from my point of view, I think there's something we want to keep in mind, is there's a high concentration of ownership in Bitcoin. 95% of the value of Bitcoin out there is controlled by 2.4% of the holders of Bitcoin. And those are considered the whales. And we've seen a lot of not just individual participants that have put in size, but also institutions. We're seeing more and more acceptance of Bitcoin. So it's not going away anytime soon. We see China ready to launch their digital currency. And other central banks around the world are evaluating that too. The central bank, the ECB, the Federal Reserve here in the States, they're looking at that possibility of that type of mechanism. So I think the blockchain concept is positive in that regard. But if we also think about what can Bitcoin do, with the blockchain mechanism, we can do about 14,000 transactions in an hour. If we think about just MasterCard, the credit card company, they do about 236 million transactions in an hour. So is Bitcoin really going to be able to handle the liquidity needed to be a substitute currency? I think that's where some of the doubt comes into play with this. And whether it has a high correlation to our US dollar, to gold, I have my doubts about that. You know, it's a market that's here on perception, not because there's something holding it. There's a cash market below it that's supporting it, like you do have in gold or some other market that we've talked about, crude oil. Those markets have a cash component. Bitcoin does not. It just has good intentions. So what's going to fuel it going higher is that more and more people want to buy it. The perception is that this is going to go higher, not because of any direct fundamental. So right now, I just haven't seen those correlations in other markets to give me a real strong feeling about Bitcoin.
Well, that's pretty interesting, by the way. So you have your doubts as well. Is this what you're saying?
Yes.
All right.
Could it go higher? Absolutely. No question about that. But could it back off tremendously? I don't expect a big down move in that market either. Excuse me. So I'm neutral on it right now.
All right. I just wanted to get back very quickly to the bond market just to see the reaction after the inflation data. So far, we don't see a huge reaction despite the fact that the PPI, the US PPI, was well above economy's expectations so far. The 10-year at 1.66, the 30-year at 2.34. Dan, do you think that the bond market has kind of room for rising yields?
Yes, I do. And I expect weakness in the bond futures, and which means an increase in yields in the bond market. So yes, I do think we have a chance for further movement there. It's a logical move if we also think about rotation. If we think about when we see the yields decreasing or increasing, what does that mean? It means that capital is flowing in and out of that marketplace. And we see, what's interesting to me is that we see weakness in the bond prices, increasing yields today. And we're also seeing a decrease in the stock market prices. Something I believe has to give here. And my feeling would be higher yields and higher stock prices. That's the way I'm looking at that relationship. But right now, they're both moving in a way that's typically not sustainable. But yes, I am bearish on the bond futures, and I do look for further weakness, which means higher yields.
All right, then very final question. What's your take on the equity markets? How far can we go with this crazy rally, which is starting to be very difficult even to explain and to figure out?
Well, let's think about the volatility. I think the last time you and I were together, we were talking about the idea of the S&P getting near 4,000. And we've exceeded that since then. The next level we could look at, let's say if we want to look at the S&P in terms of movement, would be 4,150. And it could take a while to get up towards that level. So right now, I'm still bullish on the stock market. Could we have a correction here because of fears? You know, Alex, here's what goes through my mind. If we think about what's happening, so we had an increase, a potential increase in inflation. Has it happened? Is it reality? No, it's the possibility. So that's what the market is reacting to, the possibility that we could have an increase in inflation. So it's not reality. So do I expect a dramatic break in the markets? No, I don't. Because of that fact, we really haven't seen the reality play out into the market.
All right. Thank you very much, Daniel Gramza, President Gramza Capital Management. Thank you for joining us and have a great weekend.
Thank you, you too.